Please welcome to the stage board member and advisor, Modern Treasury, Paul Auvil.
Thank you. First, I just want to thank everyone for taking the time to come and join us today. I know you've got a lot of other things going on, and so taking a whole day out to hear about the latest with Modern Treasury is something that I, the entire board, and obviously the whole management team really appreciate. I know this is just about time for lunch. We just have this one session, and then it'll be lunchtime, but I think you're going to find it to be really interesting. First, quick background on me. I spent over 35 years working in tech, mostly as a CFO of both private and publicly traded companies. After 35 years of 7 days a week, I decided I should take a bit of a break and make up for the 35 years of vacations that I never took my wife on. So I've been doing a little bit of that. But also, in this next phase of my career, I decided that what I really wanted to do was just find a way to take all of my experience and learnings and just be useful in whatever way that I can. And I was thrilled when Dimitri, Sam, and Matt, after I got to know them, invited me to join the board and just see what I could do to be useful to them as they were scaling the business. And I've been on the board about 6 months now, and it's been a tremendous amount of fun. I'll tell you, just looking at what they presented today gives you a sense for the vision and the direction and the innovation that they're driving with this platform. And having been a CFO for many years, this is a highly underinvested area by various companies that support fintech, and so I think there's a huge amount of opportunity for Modern Treasury to continue to advance the ball up the field and really differentiate and provide amazing solutions to companies large and small. So with that said, today's panel is all about new rails, new horizons, and I have 3 panelists that are going to join me up here on stage. The first one is Erin McCune. Erin has spent over 25 years as a consultant in fintech and payments. Recently, she was an expert partner at Bain & Company, but just decided, just in the last handful of weeks, to strike out on her own and founded a firm called Forte Fintech. And if you want to hear a little bit more about that, I'm sure she'll be around afterward. I'd love to talk to you about it. The second panelist that we have is Ron Karpovich. Ron is currently the vice chair of embedded finance and solutions at JP Morgan. He's got over 30 years of experience in banking, 20 years over in London, and has a lot of experience in online and mobile payments, and has rolled out solutions in over 50 countries around the world. And you can just imagine the complexity of all of that. And then the third panelist is Zach Abrams, and you may be familiar with that name only because the company that he founded 3 years ago and is CEO of, Bridge, was recently acquired by Stripe. Before that, he cut his teeth at both Brex as well as Coinbase, developing product solutions there, and then struck out on his own. Obviously, had a very nice solution that got acquired by Stripe, and now he's part of the Stripe team. So with that in mind, let's welcome all 3 of them to the stage, and we'll get started. Okay, well, we all made it on stage successfully, so I think that's a good first step. I think that the keynote, obviously, was all about AI. It was just fascinating, the work that Modern Treasury is doing in this area. And so I want to start with that topic. And I think, in particular, Erin, because of your work in consulting, you have a very broad view of what's going on in AI. There's been a lot of hype. I think, per the Gartner hype cycle, we went from everybody very excited about it to kind of the valley of despair. Now I think we're working toward that plateau of productivity. What's your take? Where are we, and what are you seeing out there?
So I am optimistic, honestly, particularly since I've spent much of my career in the back office automating payments and all of the attendant troublesome workflow issues on either side of transactions. And I have said many times on this stage and others, I can't retire now because we are finally going to be able to address some of the things that made my hair gray along the way. So I think it's real. I do think I'm heartened to see the judicious, human in the loop, guardrails that the team here just demonstrated for you. I think that's really important. I believe as we're sort of thinking through Gen AI in particular and agent purchasing in the payments realm, it's very important to acknowledge that AI and ML are actually incredibly mature in financial services. And now we just have complementary new tools that we can use to ingest and deal with a bunch of unstructured data and feed it into the mature models that we already have and make them better. And then we also have new ways to access and utilize and interface with some of our traditional models. So I think it's a step change for sure, but it's also building on a very long legacy that we have. So it's not, I mean, it's new, definitely exciting, but we have to do it smart.
Yeah, yeah.
And we are doing it smart.
Yeah, I mean, the good news is AI works best when there's a lot of data to work with, and there's certainly a lot of data to work with in the world of fintech and payments. Ron, I'm curious, what do you do? I mean, I know there's probably things going on at JP Morgan you can't talk about publicly, but within those guardrails, what do you see there at the bank?
Yeah, obviously, I think all the major banks are investing heavily in AI. Fraud, as you mentioned there, is obviously a ripe use case against being able to run agents who are able to reduce false positives, be able to get transactions going through faster, be able to think about that. Obviously, there's just the productivity side of things, like being able to do your executive summaries on your presentations, being able to do research. I hope at some point we're able to do it on our email, so that you wake up in the morning and the email is already.
You're not going to write email anymore.
I hope not.
Your agent's going to do it for you.
And then I can retire early as well, which would be great in that step. That's what I'm hoping for, like we're going down those steps. I think one of the interesting one is when you start thinking about things like, right now you can do a search and be able to tell whether an account is open. Being able to tell that the account was opened yesterday, or that the account has balance, or the account has normal balances, or a few days ago the balance went up a much higher. That kind of information in a payments world is going to be very valuable in being able to look at more things like, instead of fraud scoring. Is this low fraud, high fraud? Think about it in that kind of context.
Yeah, that's fascinating. And I'm going to move my chair because I cannot see Zach. So Zach, I'm curious, obviously Bridge, all about crypto and stablecoin and some amazing things you've done there. What were you doing prior to the acquisition, or what are your plans post-acquisition for how to incorporate AI into the platform?
We've experimented with AI across a bunch of different facets of the business. So we've experimented on the compliance side, on the fraud side, on the support tooling side, the actual support response side. And thus far, none of those experiments have really worked for us. It has, I was just talking to Dimitri about this, like the main problem for us has been that maybe the agents are capable of performing whatever the task might be, but actually connecting them to the systems that our teams use to ultimately make decisions is not really been possible. And like something like compliance, for instance, you have internal tools, you have like external tools that you're using, and then maybe you're using an agent to pull in information around a specific thing, and then feeding that into these other systems ends up being just more complicated than it was worth. But we've tried. Eventually those problems will get solved.
Yeah. So I guess you're in what you might describe as the experimental stage right now, looking for ways to create a reliable production quality AI solution that you could adhere to the.
Yeah, I mean, I think actually next week we're meeting with like a team that just left OpenAI that's building a bunch of models that they're basically building private models as a service for companies like us, because these like big, generic models are going to be good at a lot of things, but they're not going to be really great at, maybe fraud decisioning for bridge. Like Stripe announced last week that it built, its own sort of payments model that had a material impact on fraud. Well, that was like an internal model that Stripe built specifically for Stripe. It wasn't using, 4.0 or what have you. And so I'm like pretty optimistic that will work, but we'll still have the same connectivity issues that we've experienced before.
Yeah, I think you and Ron both touched on the idea of using AI around fraud detection. It's a natural, because if you have false positives, it's not going to bring systems down or send $1 million to someone that doesn't deserve the money, what have you, that might be hard to claw back. Are you seeing this, Erin, in some of the consulting engagements that people are focusing there as a starting point?
Absolutely fraud. And it's linked to the fact that we have all these mature models and we're sort of building on a foundation. I think Zach's point about training the models and having payment-specific, payment operation-specific models trained on specifically on these data sets is absolutely critical. I think in the sort of broader financial services world, we've moved out of experimentation and into scaling of the use cases around, empowering your customer service reps and giving them prompts and information to make them more effective, or sort of up-level new call center junior level employees and get them up to speed faster as sort of a I don't want to use the term co-pilot because I don't want to talk about anyone specifically, but as their sort of personal coach in their new job to help them out. So I think those use cases are working, are mature, are sort of scaling.
Yeah,
but as
and a safe way to use it.
And safe, and there is a human in the loop. I think when we get into the more complicated use cases, where we were just looking at the demo and we're talking about signals, and we're talking about signals within a context and being interpreted by a group of people that are true payment geeks, and I use that word very deliberately in this room, then that makes a lot of sense. But I think we're just one industry and one set of use cases. And I echo the comments about the general models being sort of fun and cool, but when we get to brass tacks, we need to do it bespoke.
And the one I was going to add to that as well is that when we think about like e-commerce and think about it as using these tools yourself, you're saying, okay, I want to buy a flight, and I want to find a flight that's at this time, this day, go to this place, and buy it for me. That last element sounds very attractive. Obviously, lots of people are looking at how that monetizes these things dramatically. Yes. We sit there and think about it, what happens to the chargeback when you said, I didn't want to actually go on that plane, or I didn't want to fly that? Is it going to the agent who did it? Is it the person who told the agent to do it? Is it the company that's running it? These are the kind of edge case scenarios that are actually much harder to think about in that process.
So when I think about this, like the delegation of authority to an agent to actually buy stuff for you, we have tools in place. Like if you think about commercial cards and delegating, like, I'm sorry, you're traveling for work. There are rules about how you can use that card.
Yes.
And then we have a whole set of other sort of attendant use cases where, maybe this particular PAN or VCC can only be used in this zip code within this time frame because I've given it to you and you're driving a truck and you're supposed to be on this route. And if you're over there, you can't use it.
Right.
So we actually do have those tools, and that's how we are going to delegate authority in a way that we're comfortable with.
Yeah, and I fully agree. You're gonna that rule set is gonna have to be played out.
Yes.
If you're OpenAI, you don't want to be subject to every chargeback ever done through everything.
No.
Through the process. But as a e-commerce company that's getting a request coming in through OpenAI, and you want to do that transaction, who do you rely upon that?
Right. How do we know it's your agent?
Yeah, exactly right.
Could be Zach's agent.
I know. I think that, it really validates the approach that modern Treasury is using, which is, create agentic AI, and have people using them as essentially an enhancement to the workforce,
Right.
but you're monitoring the agents, monitoring their work, and then you're the final human in the loop decision maker on actual actions that move money from one place to another. And I think that's the right approach at this stage.
And being judicious and recognizing that this is moving very quickly.
That's
and
right.
we will have more tools and more experience in what we do. When we have this conversation, not next year, but in 90 days, it will be different.
That's right. Well, and speaking of things that are moving quickly, let's move on to stablecoin. Modern Treasury, recently announced their onboarding of stablecoin as a mechanism for moving money around the world. Zach, you obviously are, I would say, the foremost expert on the topic here on the panel, given your work at Bridge. What's your take on where we are with stablecoin and where you see things going at this stage?
We're still very early. We started the company 3 years ago. We opened up our APIs 2 years ago. And a lot of the folks who were coming and building on us were sort of like, on the frontier. It was a lot of developers and teams who were building products in LATAM or Africa or Asia, and they had on their own come to the conclusion that stablecoins would be helpful in some way, shape, or form, and then they found us and came and built a product on our APIs. When the acquisition was announced, we very materially felt, us shifting along the adoption curve, and a whole new set of folks started coming in, people who were in businesses who were interested in stablecoins and had some idea of maybe there was a use case here or there, but needed our help to define what that use case was and how it was going to be used. And then as a result, the actual use cases where stablecoins were implemented for these businesses also started to shift. And that was I don't know, 6 months ago or nine months ago. And I think when we have stablecoin legislation, it's going to be another material shift along the adoption curve, which brings in a whole new set of folks to use stablecoins. And to give concrete examples, a lot of the use cases that grew really quickly had to do with at first had to do with cross-border payments, and then shifted to global payouts, and then shifted to folks building global fintechs. And when there's stablecoin legislation and this sort of thing, I think it shifts again to a bunch of folks who are doing treasury operations and this sort of stuff. I talked to one of the largest retailers in the world, and when they're moving money, they have money in the U.S. and they need to move money to Brazil. The money goes from the U.S. to Ireland, Ireland to Singapore, Singapore to Brazil, and it has to go that path for tax and legal reasons. And moving that money takes days, Swift, settle,
Probably
Swift,
weeks,
settle.
honestly.
Yeah.
Yep.
Yeah. And they it's very obvious to them that in the not too distant future, they have wallets for each of these entities. They hit a button and the money moves from 1, 2, 3, and then drops down in Brazil and then is converted into reais. The big question, though, is that there's nothing we can do about that use case today because they don't know how the stablecoin will be treated when it lands in Ireland, and what are the tax implications, and so on. So those are the types of use cases that are just very core. Enormous sums of money are moving all around the world globally,
Yep.
but have not yet been unlocked because we're still just super early in this journey, and there needs to be more regulatory clarity.
Yep. No, that makes perfect sense. Ron, you and I had a conversation maybe a week ago about some of the work that JP Morgan's been doing, going all the way back to 2019 with stablecoin. I'd love to have you share that with the audience and then talk a little bit about your broader perspective here.
And I think the background to that is more on the lines of using blockchain and the functionality and the technical infrastructure in that place. If you're using blockchain to move assets around, fundamentally the way the technology works, you have a coin of some sort that is being your means of transferring that process. There's a big difference between being inside the bank and outside the bank. Okay? I think what you're talking about is being able to go between entities, and we talk about what goes on within the entity. And liquidity is a great use case. We look at a company that banks with a major bank, they probably have multiple bank accounts all around the world. The consolidation of that is your liquidity with the bank. But if they're in different locations, being able to get access to that as quickly as you possibly can and move that around the world 24 hours a day, 7 days a week, very helpful. Swift doesn't really give you that capability. There's an opportunity. There's now the discussion of how you connect bank to bank to be able to say liquidity at one bank versus liquidity at another bank. Those are kind of the use cases that we're talking about at the wholesale bank level. It's very different when you're talking about stable coins as a payment type in the process and how you get into that space.
Erin, what's your take?
I echo both sentiments. I think I want to really underscore the wholesale money movement between institutions, the sort of plumbing behind the scenes element of this, and unlocking the liquidity and the visibility and the predictability of that money movement is material and very important.
Yeah.
Very important. But, there's obviously the regulatory aspects and the clear confidence that a corporate will know that it's okay to do this. That's really important. I would also say that we need the tools and the providers beyond the banks that corporates work with to enable all of this. And obviously modern treasury plays a role in doing that, but we have a very big ecosystem that support the sort of broad office of the CFO that needs to collectively, enough players need to get comfortable, understand how this is going to work, and then work together to bring this to bear. And it's going to happen in parallel alongside the traditional way that we do things.
Yep.
But, the only people that are more conservative than treasury bankers are corporate finance folks.
Yeah.
So we need to engender comfort and trust and visibility and transparency.
Yeah, our when we started the company, our view was that there was this over the preceding, 30 years or something, there was this material platform shift in payments of money moving onto cards. And if you looked at, most of the biggest fintechs, they were card related in some way, shape, or form. You had Stripe and Square, and I worked at Brex and Ramp, and even Chime and Revolut and Nubank. All of these started in some capacity as card companies, and fintech is this thing, but so much of it went to just moving and enabling payments through this new medium. And our view was that stablecoins were sort of the next major platform shift for how money moves. And the first stablecoin was created a handful of years ago. APIs like ours to be able to move money via stablecoins didn't exist until 2 years ago. And so if we're on a similar journey, we're a tiny fraction of the way through.
Yeah. Your story a few minutes ago about this notion of having to route money across 2, 3, 4 countries and the time and cost that it takes, it just resonates with me, just having been a CFO of some pretty large companies where you have bank accounts in 20, 30, 40 countries. And you need to mind the balances in each one of those locations because you have payroll that you need to make, other payment obligations. And so you have a huge amount of money that's parked offshore in non-yielding accounts. Much more than otherwise should be there, but you need to make sure you've got a buffer. And it's just hugely inefficient. And so a vision where you have a large stablecoin repository, where you have a wallet in each one of those countries, where, kind of click of a button, you move the money to that location and then move it into the local currency and facilitate payment. I don't see how that isn't the future. I mean, once we clear some regulatory hurdles, because it's such a better way to run a balance sheet than how things work today.
Agreed. I mean, it is, I'm obviously biased, but, I think almost all money flows are going to move through some form of tokenized dollar. But the sort of only real question in my mind is, there are only so many treasuries. So at some point, actually the amount of stable coins begins to hit a ceiling of the number of treasuries that exist.
No, because the U.S.
And that's
government
really
will raise more debt. Yeah, we'll
Yeah.
just another.
Yeah, we
trillion, there'll
need
be
we
more
need to
treasury.
lower taxes and to take on more debt and all those things solely so that we can accumulate more.
Exactly.
stablecoins.
See, there, it's problem solved.
Yeah, yeah.
As long as this goes up to the right.
Yeah, we're on that path. So
We are.
And it's
Plan
funny.
A is in force.
Because I'm obviously biased as well, but probably
Yeah.
in a different direction when we talk about these things. I think the interesting thing about you kind of said it's a recent phenomenon. I think it's somehow how you look at these as well. I mean, I would argue 15, 20 years ago, PayPal is a stablecoin. It runs the same way. We don't think about it way. It didn't announce itself
exactly.
that way, but it was that kind of asset. I think what stablecoins do right now in a regulatory environment is they are allowing deposit taking outside of the banking infrastructure. You're converting into a store value that isn't US dollars. You don't have to open a bank account. You don't have to do the KYC and banking things that we have to do as a bank to be able to offer the service. And that's where there's a real kind of use case opportunity until the regulation is set in a way that allows or doesn't allow that is afforded to fintechs to be able to do this right now.
Yeah, I mean, I had dinner with someone from the Fed maybe like a month ago, and he was telling me that the supply of U.S. dollars grows physical U.S. dollars grows at 8% every year, which is like amazing because it's just compounding at 8% on top of this astronomically large base. And he was basically saying the reason why that happens is because we just have to pump more dollars into the supply because so much of it gets taken out every year from people like taking these dollars, throwing them in suitcases, taking them out of the country, and just sitting on it. And so to your point, one of the first uses of stablecoins was literally like demand for US dollars was like way up here, and the amount that was met by physical cash was down here, and filling in the gap in between the two.
That's fascinating.
Yeah.
And I think the whole industry is kind of predicated, especially at a wholesale level when we talk about the corporates and about the word stable. Like if you know it's going to be stable, this is all very interesting. How many different use cases can I do the technology? If it's not stable, what happens? And I think that's the element of change that's going to have to occur over the next couple of years as people understand it and find use cases where they're like, I'm comfortable with this stable.
Right, and that's back to the confidence.
Yeah.
Like, we've got to collectively make the steps that we garner a level of trust.
Yeah, and I'll use the simple example. I was going to say, you'll have a stable US dollar coin. You probably won't have a stable Venezuelan bolivar. And you think about it that way, you kind of go, well, it's probably not putting stable in front of the word bolivar is going to give me stability. Yeah. And it's just thinking that through. And that's the use cases, and that's the things people have to build out to make sure that is stable.
Yep.
It's an interesting time to be a central banker in one of the geographies that has beleaguered fiat. Because that's getting much, much, much more.
Yeah.
I don't know. I worry about an overreaction, unintended consequences.
You could see.
The main difference, though, with a stable coin that we have seen is that, before stable coins, if someone wanted, for instance, to open up a U.S. bank account, in Mexico or something, you are marketing in order to store U.S. dollars in a U.S. bank account, you need a bank account in the U.S. Right? So you're going to folks in Mexico and you're saying, hey, you can now store money in U.S. dollars, but in order to do that, you have to keep your money in the U.S. So, obviously the government of Mexico does not feel so great about selling that product to its population. And now with the stablecoin, you give people the ability to hold this asset, but natively inside the country. And so in a lot of cases, we're actually seeing that there really hasn't been that much, it's basically no pushback because the majority of the flow is moving money into the country.
And it is staying local.
Yeah, and it's staying in the country where there is, where there are sort of dicey aspects from, where there's more regulatory uncertainty is, when people are using stablecoins to move funds out of a country. And so you see a lot of that in Brazil. There's an enormous sum of stablecoins that are used primarily to skirt different taxes and pay, suppliers in China or something like that.
Yeah, that's where I think the regulatory oversight is going to end up crimping this a little bit, but then creating clarity on where we go from here. And speaking of which, 1 minute, and then it's time for lunch. So rather than run over, I just want to take the time to thank the panelists for an amazing conversation.
Well done, gentlemen.
Yeah.
And also, again, thanks to all of you for coming to spend the day with us at Modern Treasury. So with that, let's break.